Starting to invest can feel a little scary, right? You've worked hard to save up some money, and now you're wondering how to make it grow. With so many choices, stocks, bonds, real estate, crypto, and even things like art and watches, it's easy to feel lost. Maybe you've seen ads promising quick money, and that makes you wonder, is it that easy? What if I lose everything? Well, don't stress. This guide is here to help you understand the basics of investing, step by step. You don't need to be an expert. We'll keep things simple. In this video, we'll cover everything you need to know to get started with clear answers to your questions. We'll discuss how to make smart decisions and avoid common mistakes. So, are you ready to take the first step toward growing your money? Let's get started. And hey, if you find this video helpful, don't forget to like, subscribe, and hit that bell icon for more tips on making your money work for you. 1. Understanding the basics of investing. At its core, investing is all about making your money grow. Let's say you have $1,000 in a regular bank account. While it might earn a small amount of interest, inflation means that $1,000 will decrease over time. For example, if inflation is 3% a year, your $1,000 will only be worth $970 in a year. That's where investing comes in. When you invest, you're putting your money into something that could increase in value over time. Investments like stocks, bonds, real estate, and other assets have the potential to grow or generate income. For example, if you buy a house, there are two ways it could benefit you. Rental income. You can rent the house out and earn monthly money. Appreciation. The house's value could rise, allowing you to sell it for more than you paid. Investing lets your money work for you, helping it grow rather than losing value due to inflation. 2. How to invest in stocks and shares. One of the easiest and most common ways to invest is by buying stocks and shares. When you buy stocks, you're essentially owning a small part of a company. For example, if you buy shares in Apple, you own a tiny piece of Apple Inc. The goal is to see the value of that stock go up over time. Here's how it works. Let's say you buy Apple stock for $100. Over time, the stock's value might rise, and a few years later, it could be worth $150. If that happens, you can sell your shares and make a profit of $50. You can also earn money from stocks through dividends. Many big companies, like British Telecom, BT, share a portion of their profits with shareholders in the form of dividends. This is similar to earning rent from a property you own. It's another way to make money from your investment. 3. Addressing common fears and questions. One big worry for new investors is the fear of losing money. Investing indeed involves some risk, but there are ways to reduce that risk. The most important way is diversification. This means spreading your money across different types of investments, like stocks, bonds, and real estate. By doing this, if one investment loses value, others might do better and balance it out. For example, while the value of individual stocks can go up and down, history shows that over time, the overall stock market tends to grow. If you invest in something like an index fund that tracks the S&P 500, which includes 500 of the biggest US companies, you're investing in the success of these companies as a group. Some may fail, but the market usually grows in the long run. This gives your investment a better chance of growing over time. If you're still worried about losing money, keep in mind that investing is about the long term. Both the stock market and real estate tend to increase in value over time. So, even though there may be short-term ups and downs, staying invested usually leads to positive returns in the end. 4. Faster approach. Fast lane investing. For those looking to build wealth faster, there's a strategy called fast lane investing. This approach involves taking on more risk in the hopes of earning bigger rewards. It might include things like cryptocurrency, day trading, or investing in more uncertain assets. While there's a chance to earn big profits, there's also the risk of losing everything. For beginners, it's usually safer to stick with more traditional investments, like stocks, bonds, or index funds, until you understand how the market works. It's important to get a strong grasp of the basics before diving into riskier options like crypto or day trading. However, fast lane investing isn't just about stocks or bonds. One powerful way to grow wealth quickly is by investing in yourself. This could mean taking a course to learn a new skill, starting a business, or building a personal brand. For example, you could take a course to become a freelance writer, investor or learn how to start an online business. The returns on investing in yourself can sometimes be much higher than the returns you'd get from the stock market. Starting your own business is a great example. Running your own business or side hustle can bring in higher returns than traditional investments. Whether it's opening a coffee shop, starting an online store, or creating a YouTube channel, the potential for growth is often much bigger when you're in charge. Entrepreneurs like Alex Hormozi often stress that building a business can lead to much greater rewards than just investing in stocks. 5. How to start investing today. If you're ready to start investing, don't worry. You don't need to be rich to get going. Nowadays, many platforms let you start with as little as $5 or $100, depending on where you are. Some popular platforms include Trading 212, Vanguard, and Fidelity. These platforms let you invest in things like stocks, bonds, and ETFs without needing a big initial deposit. Before you start, take a bit of time to research different platforms available in your country. Make sure you understand any fees or charges that might come with them. It's important to choose a reputable platform that offers the types of investments you're interested in. This way, you can start investing with confidence. 6. The importance of patience and long-term thinking. It can be tempting to look for quick ways to make money, but remember that investing is a long-term commitment. Whether you're investing in real estate, stocks, or even crypto, it's important to be patient and not get discouraged by short-term losses. The stock market, for example, tends to rise over time, and as you keep your money invested, you're more likely to see growth. As Albert Einstein famously said, compound interest is the 8th wonder of the world. This means that when you leave your investments to grow over time, they start working for you. Your money can start making more money, helping you build wealth without having to do much. 7. Learning and growing your investment strategy. As you start your investing journey, it's important to keep learning and improving your knowledge. Whether it's reading books, watching videos, or taking courses, the more you learn, the better your investment decisions will be. A great book to begin with is The Intelligent Investor by Benjamin Graham. It offers a solid foundation in value investing and is a great resource for beginners. You might also want to explore other types of investments, like real estate, peer-to-peer lending, or even cryptocurrency. But remember, always make sure you fully understand what you're investing in before you put your money into it. Learning is key to making smart choices that will help your money grow over time. Investing can truly change your financial future, but it's important to take it slow and start with the basics. Begin with small steps, spread your investments across different options, and give them time to grow. The more patient you are, the better your chances of reaching financial freedom. Don't let the fear of losing money hold you back. Remember, the key is understanding how much risk you're comfortable with, keeping your investments diverse, and focusing on the long-term journey. So, are you ready to start your investment journey? What steps will you take first? Good luck and happy investing. If you found this helpful, don't forget to like and subscribe for more tips on how to grow your wealth.